Okay, guys, well, we are recording. Welcome to the SuperEZ Forex trade room. Sorry about all these alerts coming up. But what I want to go over tonight, like I talked about in the group, was I wanted to go over the exit strategies and management. So for right now, I do have the line muted just so I can kind of cover these points without getting all distracted. So kind of write down all your questions, keep them at the end. Any pairs you want to look at, we can kind of go over then. So I'm hoping you can see a good portion of my screen. I'm not sure how much you can see at this point, but I have it smaller for a reason. We're going to probably make this video public. So having said that, obviously my disclaimer is I am not a financial advisor. I am not a financial expert. Forex is a high risk activity, and anything that don't ever trade what you're not willing to lose. So don't go trading your rent money or mortgage money. Yeah, this is just for educational purposes, and that's it. So any trade ideas discussed are voluntary and do not have to be taken. So now that that's out of the way, because I know that Pat and I were talking about it, all these postings get people in a lot of trouble when you post screenshots and kind of share results. So having said that, there was a lot of questions in terms of how do you exit a trade, how do you manage a trade? And we already know, like, we have a really good system and 1,000 different ways to use it. We have a fantastic family of people and group that we work with who are just always willing to help people out. And obviously we have all the tools and indicators that we could possibly need. We don't really need much else. So what comes next, obviously, is how do we manage the trade? We've talked a million times over on the confirmations and indicators we use to enter. We already know that we can kind of move our stop into profit if you're asking me, because I trade very safely and protectively. We already know we can use trailing stops. We've already talked about all of that. But either way, what we're looking at tonight is how do we know when to exit a trade? And that's kind of like a big question. And we know that we can kind of set our profit either as a runner. If we're stacking, we can have one that's set to the ADR. Over here, the average daily range. We can have one set for a set amount of pips depending on the time frame you're trading off of. And we can even have a trailing stop in terms of management. But there are some indicators and rules that you can create as part of your trading plan, as part of your algorithm, or whatever that one guy says. He has some fancy word, I don't remember it, but we can create our exit rules based off of the indicators we use and what we see. So the concept is, how do we kind of decide what exit indicators to use? Well, first and foremost, okay, again, we already know what rules we're using to take the trade. I'm going to go to kind of a more naked chart, this one, for a reason. So this is kind of just basic. Can you guys see, somebody can type in the chat, can you guys see my mouse right here, just out of curiosity? Like, I'm moving it around. I don't know how much of the screen you guys can see at this point. Let me see. Yes, perfect. Thank you, Derek and Eduardo. Okay, so I'm going to pull up some indicators. I'm going to make this a little bigger real quick so you guys can see everything. You go to share. I want to go to basic, my entire VPS. Share. And now you guys should be able to see my entire screen. So the reason why I'm doing this is because we can tell that aside from our fancy tools and all the little oscillators we use, we should know when to exit a trade before it hits our take profit or before it hits our stop loss, technically speaking, if we're using enough tools, if we're using the right tools. So we know, like these two crossing over is part of our original triple arrow system. We have changed it up a couple of times in terms of a singular EMA or in terms of two varying EMAs. So I can tell you the first and foremost what we're not going to use as an exit indicator. So I may move this little zoom bar out of the way if it will let me. So what I'll first off tell you is we definitely do not ever want to use the oscillators, because we can be overbought and oversold for like a super long amount of time. And if we use an oscillator, almost any of them, as a way to tell us to get out of a trade, such as this one, this is overbought, oversold, this trade, not only would we have missed the majority of the move, okay, so that went another 200 pips almost, give or take, just because this hit the 30 on the RSI. So we're definitely not going to be looking at oscillators. Same goes for stochastic on whatever settings you use, different reasons, different purposes. But we don't want to use this as a reason to exit either in general. They're just not super reliable. ADX, again, this isn't a super great example, but I just wanted to show it to you anyways. So ADX, we don't want to use that as an exit indicator either, because technically we can get moments like this. I'm going to scroll over to somewhere. This is going down nice and smooth. But at any given moment, oopsie, there we go. At any given moment, we're going to get this like jumbled up part. And in this case, it worked out great. This isn't a great pair to show you, go figure. But all of these times it recrosses and then continues in the same trend, so this continues down, you're missing out on all those pips. So the first thing I would tell you is we're definitely not going to use an oscillator as an exit indicator. In general, we're just not going to go that route. We can choose to use the same indicators we use to enter as an exit, but as you know, some of the ones we use to enter repaint. So that would, again, not be a great exit indicator. So now we've checked off the whole triple arrow system. We're not going to be using that in order to exit. We're not going to be using any oscillators in order to exit. So what kind of does that leave us with in general? Let's see. So first and foremost, when we're using any indicator to take an exit, we're going to want to use the same indicator that we entered on, the same time frame we entered on. So if we're finding our trades on the 4 hour and we're entering based off of the 1 hour, whatever indicators we decide to use as an exit indicator as part of our rules, we're going to want to find that on the same time frame we enter on. So again, if I'm entering the trade on the 1 hour, I'm going to be trusting the 1 hour in order to take my exit as well. So let me go ahead and put a 50 on here. You guys know how I feel about the 50. The entire Ichimoku system is based off of the 50. That whole cloud is based off of the 52 and just all fancy and all that good stuff. But so here's the 50 kind of put in terms, really naked chart, not a whole bunch on here. So you guys can make it the most simple answer possible if you guys wanted to. You can choose to exit when price closes on the other side of the 50. So if you're buying this right here, because our arrows told us to buy, all of our oscillators that we use that I want to keep private, obviously, told us to buy, then we're going to stay in this trade until price finally closes below. So we would have exited here or anywhere here, depending on when we were in front of our charts. And we obviously would re-enter if we wanted to, or we would have missed this part of this move. That's actually a reasonably good way to find your trades and to exit, because it's one of the safest ways possible in terms of finding a way to exit the trade. You'll notice that kind of going back in history in general, which I guess I'm going to say that a lot tonight, might be my word of the night, price isn't going to break above the 52 too often. It's going to continue trend. You're going to have this consolidation period before it decides the next trend. And we can go back, we can pick any pair you want, even the GBP pairs, which are just doing their own crazy thing right now. This is kind of choppy, it's a mess. I mean, so this isn't a super fair or fun one to look at, but let's assume we had all of our confirmations here, that our crossover broke the 50, and we have the other bajillion different oscillators we choose to use along with our triple arrow system, told us to buy. We could stay in this trade the entire time, or we can get out anytime it breaks below the 50. So we already know in terms of management, we're moving our stop loss up, we're using a trailing stop, but that is an exit strategy that a lot of banks use, a lot of multi-million, multi-billion dollar traders use, and that's a very safe one. Now, one that I was taught by a mentor in IML and I kind of stick with and I kind of like is they used actually a really, really, really fast moving average. Well, a little too fast for my taste. Of course, we had it Aqua because that was his deal. Let me go to that. Sorry for the background noise, guys. I'm in Starbucks again tonight. Okay, so this is simply the 4 EMA. And again, we're not going to have this on our chart to take the trade. We're going to have this on our chart to manage the trade. So you can keep the similar concept in terms of the safest way to trade. You're going to stay in this trade until it closes below the 4 moving average. And that's a simple way. You can choose any single moving average to do that with. I do that quite often in terms of the 8. I don't prefer the 4 because it doesn't leave enough room for it to breathe. So I can stay in this trade even for my scalping flip-flop strategy. I can stay in this trade until it closes below the 8, which then instead of getting 10 pips, I'm getting a whole bunch of pips based off of a few minutes of my time. So that's kind of nice. And the next one would be the simple EMA crossover. So you stay in this trade until the EMAs recross. In this case, this is the 8 and 18. Some people use the 5 and 13, which as we know happens way too frequently. Let me scroll over. We took this trade because, again, we had our crossover, broke the 50, had our triple arrow system and all of our oscillators lined up. Had a nice pullback, which I'm sure freaked a lot of people out. Let's see, we stayed in this trade until the EMAs recrossed over. That allows us to take the earliest possible entries, and it also allows us to get the safest possible exit. So it helps us to manage the trade and just get the most out of our money. Because in Forex, I mean, it's said so many times, we want to cut our losses short and let our winners run. So learning how to manage the trade and when to enter and exit is like a huge thing that will make a huge difference in your trading. Let's see. And the same goes for exiting. So if you had taken this trade, somewhere around here, we broke the 50, we were in profit all the way up to here, and 60 pips, that's what you got out of it, and then you see it crosses back down, and you don't want to give back all of your pips. Okay, you don't want to give them all back. You can use that crossover as an exit, or again, the close below the 8 as an exit, or even the 50. Those are all options. Because guys, 200 pips based off of a couple standards is enough on one trade to pay all of your bills for the month. And then you can use a separate account to grow to your 6 and 7 figures. But seriously, 50 pips on a few trades, 200 pips on one trade, that is all you need. You don't need to catch a billion pips, especially not when you're compounding and using bigger lot sizes like we're supposed to. So the last option, which is tried and true, a lot of people love them. I'm not too fond of them. As you guys notice, I didn't even change the colors to match my pretty color scheme, is any kind of trend-based candle. So these ones happen to be Heiken Ashi Ash. Our group uses the Trump candles. They use a trend-based candle, and I believe there's one other one as well. These are just a traditional Heiken Ashi Ash. You can use this, again, as an exit. So we had our system tell us that this was a good buy. We're happy with our results. We take the trade. You don't have to worry so much about what the candles are telling you or stress out in general, because it's very simple. It's all white. There's no, or whatever color you have it set to. There's not a lot of noise like there are in regular candles. So when one candle changes color, you would get out of the trade. A lot of people follow the 2-candle rule, and it would need to close, okay, with the flat top, because flat tops on Heiken Ashi candles, although I can't speak about Trum and the trend, because again, I don't use those too much, but the flat top actually means movement in terms of these kinds of candles. So a lot of people wait for the second candle to have a flat top if you're selling, and then let's go over to a buy, just to find, and the flat bottom if you're buying. See, you'd want that second candle. You would close here. Again, allowing you to catch most of the move. But not only does it help you get the best entries and exits if you're not having just a take profit set, or if you're looking at your runner and you want to get the best possible amount out of your trade, it might also protect you from this. So let's say you only have a few $100 account and you're using a higher leverage brokerage and you have maybe one whole standard on there. Your account can't hold that much drawdown. So going off the same principle, you took this trade based off of all of your indicators, you're happy with the results, you're up 30, 40 pips. This isn't a super fast mover, but it starts to turn red. You know to exit the trade before, for instance, you end up in the negative and or below your account. Because bigger lot sizes on smaller accounts can really quickly blow your account. So yeah, my favorites are the EMA crossovers and the 8. I will stay in the trade until it crosses over the 8 for me personally. But I think that should answer the majority of your guys' questions in terms of entry and exit and how to enter a trade safely, either when it's going against you or for you. So now I have to pull my Zoom back up. I don't know why it won't let me have it on there. I'm going to unmute. Well, I guess if you guys have questions, comments, and all that good stuff, you guys can go to unmute yourself. Just keep your background noise to a minimum because I don't have a lot of control over this today. There we go. So are there any questions or comments in terms of exiting a trade? First and foremost. Check the chat. Don't be shy because everyone is messaging me a ton of questions. So now is the time to step up and get any of your questions answered. Does that make sense to everybody?
Jenny, I have a question, but it's not about entering nor it's about it's not about exiting.
Okay, go ahead.
Just for basically entry, does that make sense?
Yep, we always talk about entries. Go ahead, what's your question?
Since I trade the daily in the 4-hour, do you recommend me change my candles to look like this simple, if that makes sense? Or just stick to my regular candles?
I recommend, well, first off, again, you're having a lot of success, so I recommend you do what your eyes see best. This works for a lot of people. And I can understand why. Let me go back to the 4-hour. Look, there's no noise right here.
Yeah, it looks pretty clean. That's what I'm asking. Oh, that's why I'm asking.
The same you have to decide what works for you. I like to see the candle formation personally, but there are people who do far greater things than me, and they love those candles. So you have to do what works for your eyes. I like to know what's actually happening in the market, so I want to see the candle. So this is what it looks like if my screen would quit zooming out all weird. Okay. It's either tiny or huge. There's no medium. So we would have all these purple and green, all this noise. We'd be confused. We wouldn't know what we're thinking of or what we're seeing. And then check it out on the Heiken Ashi Ash. You're very, very clear. So how you read Heiken Ashi Ash candles is the flat bottoms with wicks to the top. If you're buying, that's good. When you start to see these doji, this is an area of indecision. So you'd kind of be mindful. You'd move your stop into profit, and you'd keep going. Same thing with the sell. So how I was taught to use these was at the close of each candle. Again, these are 4 hours, so pretending like you have a life, or like we actually walk away from our charts every now and then. Let's say we skip 2. Every close, you would move your stop loss up a little bit if you're not using a trailing stop. So let's say you skip these 2 because you were sleeping or you were on a date, and then you skip this one. You would keep doing that to all the bottoms. And then if it comes down and taps it, you again made your money safely. But then this area right here is an area of indecision. But as you notice, they're staying white. One candle's not going to hurt you. This is an ugly, ugly wick, probably news. Now we've got huge momentum candles pushing up. So this is, it's great. I mean, a lot of people love them.
I actually kind of like that, how you move your stop loss into each candle as it goes up. I kind of like that. That's pretty cool.
Yeah. Because then you can catch the whole move.
Yeah.
In theory, because check it out. If you had gotten in, let's just say here, and you kept moving your stop loss up, this wick would have been definitely tapped, which isn't. There's nothing you can do to avoid that ugly candle. That's just news. But you would know because the candles are still white. You're still above the 8. You're still following the daily dots. I'm sure we would still have our triple arrows and other oscillators telling us this is buying, and we would be good to go. So you would know to re-enter even if you did get knocked out, just based off of the information. And this is a pretty naked chart in general. So even just based off of this information, you know you can still safely take this. And again, slow mover, that's a ton of pips.
Yeah, this looks pretty good to get back in if you get out or whatever.
Yep, and you just keep doing that. It's not too hard. When the candles get small, whether they're real candles or trend-based candles, when the candles get small, we know that we're kind of hitting, support resistance or consolidating. When you start getting wicks on both sides, it's being something similar to like in the real candles, which is just indecision. The market's kind of tripping out a little bit, so you would know something is coming based off of that. And you can kind of test this back in history. It's quite powerful.
Do these candles look the same?
I'm sorry?
Do they look the same as regular candles and just different colors, or do they look different?
No, they definitely look different. So it's hard to get this to zoom in like I'm supposed to. So you see, this is what these candles are looking like. Same chart. Oh, this is the wrong time frame. Let's go to the bigger time frame. That makes more sense. So this is what it looks like on the regular candles, the Japanese candlesticks. You'll notice that there's wicks to the top. There's buy candle, sell candle, buy, bear, bull, buy, up and down. You'll even notice that the body on this huge candle is massively different in terms of the body on this candle.
Oh, yeah, it is. That's a big difference.
That's a huge difference. Well, for people who pay attention to like candle shapes and patterns and stuff. So there is a big difference, but you can see why this may be advantageous. I don't use these per se, but if I'm swinging and I want to know when to exit, and I'm not quite sure, let's say we have something like this is happening where it looks like it might be tiptoeing over my 8 moving average, and I'm not quite certain, but you see how this is kind of close, and obviously I want to protect my profits, so I might turn on my Heiken Ashi candles. Let's see, there we go, on the real candles. It's getting real close, we're consolidating. This would be an area of indecision, no different than on the other chart. By looking at the Heiken Ashi Ash candles, I can tell that they're all still buying. So there's a lot more answers there. There's a lot more information. Again, it's not my favorite method because to me, this is clean.
Yeah.
It's I'm going to stay in, I'm going to stay in, I'm going to stay in. This one might have tripped me up because technically it closed above it, and that's fine. But I catch most of the move with just one rule. And you can catch a little bit less with the crossover. You can go slightly more safe and bigger moves with just the 50. I mean, your possibilities are endless. It still comes down to, can you follow a set of rules consistently?
Yeah, that makes sense. And on the white candles or red candles, you get out when you get an opposite double top or double bottom.
You would
Right.
want two candles. So if you're buying this, so let me make them my colors. So this makes it a little easier. I didn't even do that. So here, my colors, which are purple and green.
Are these a free indicator?
Yeah, this is a free. And oh, this comes custom on every MT4. Well, not
Oh,
custom.
okay, okay.
It should come standard. I'm pretty certain. I mean, I could be wrong, but now we're gonna. So now we're the same colors. See? But this is the difference. This is what this looks like on regular Japanese candlesticks. And this is the Heiken Ashi Ash candlesticks. So you can tell the size of the candle, even measuring how many actual pips, is different than it would be on the other chart. So, but you can totally use this. But if I were to teach you guys to use this as an exit strategy, once you see two opposing candles on whatever time frame you enter, so I find my trades on the 4 hour, I enter on the 1 hour. Okay, so let's go to the, oh, see, it didn't even save the colors. Heiken Ashi Ash is like that though. It's temperamental. Okay, so once I saw two opposing candles, I would exit this trade, which means on the 1 hour, there's gonna be a lot more play because this is two opposing candles. Let's go back, see if there's any more. So that's totally up to you. But again, you're able to catch more of the move by far.
I actually kind of like these candles. I mean, they look pretty simple.
They are very simple. If you don't know Japanese candlesticks and like wicks and all the other stuff, you may as well use Heiken Ashi Ash and just use those.
Yeah, yeah. And on the Heiken Ashi Ash, do they change colors like while it's active or no? Does that make sense? Like if one candle would it flip flop from white to red or white to red, or in those colors?
That I don't know.
Okay.
I don't
Well,
I like them so much. So, I mean, does anybody on the line maybe know that answer? Does this work? Catherine, yes, these are very comparable to trend candles. They are not the same. They're comparable. So they're all trend-based candles. So they change color based off of a percentage of pips in a certain direction. They're very similar and comparable to like Renko. The difference in this and Renko is not a live chart. So it's using previous data. So Renko aren't ineffective if you ask me. So does anybody on the line know if they changed color mid-candle, just out of curiosity? Hold on, let me check the chat. Sorry. Yes, until the candle closes. So until the candle closes, which, as you guys know, anything that I'm teaching you, whether it be the crossover, whether it be the candle, or the moving average individually, no information I discuss ever works unless the candle closes. So I don't use the single daily dot until the candle closes. I don't use anything until the candle closes. So this isn't a stable signal until the candle closes. My crossover isn't stable until the candle closes. And I would want this to close below the 8. So that would be like this candle right here.
Yeah, I'll wait for the candle to close also. I just wanted to see, because these candles look way, way different. So I wasn't sure.
Yeah, no, that's a good question. I just didn't have the answer per se. So
Okay.
that is a good question. And way to go. So you got your daily dots figured out in terms of your strategy?
Yeah, this daily dots in the 4 hour, it's really all I use. I don't use nothing else.
That's fantastic. Daily dot with a 4 hour in confirmation with a triple arrow system, right?
Yeah, I wouldn't trade a dot that's against the 4 hour arrows. So.
And your accuracy is what percentage right now?
I mean, it's pretty high. It's like 80 something, like in the high 80s, give or take.
Not bad. I'm so proud of you. Way to go. All right, well, thank you for your question. Let me check the chat. Hey, Nick, can you speak? Let's see. If not, you can go ahead and type your question. Although
yes, Jeannie, can you hear me?
Yes, I can. Go ahead.
Okay, so I have a question.
Yes,
It
sir.
has to do with the longer time frames. I am dealing with the 4 hour a lot. You know, I work a lot, so I deal with the 4 hour. I've watched tons of videos, and when I see the triple arrows on the 4 hour, and I take that trade, it always goes the other way. Okay, and you know, and I even, you know, I'll get a confirmations on everything, and I'll get the confirmation on the, you know, the daily. You know, it'll be going, you know, I might see one arrow going up, but it always goes this other way. And I'm trying to figure out, and it's like that with a lot of scenarios. When I see the triple arrow, it doesn't go, it doesn't go the same way that the arrows are saying. It goes the opposite way. So if I'm taking a sell, it actually, it looks like it's a buy, and I'm losing money basically. So my other question is this. I've noticed on some of the videos that you've done and Pat has done that you guys are looking at the 15 and, coincide like with the 4. And I'm just trying to figure out how are you guys, or why are you guys like using other time frames in conjunction with what happens on the 4 hour. So I mean, if I see triple arrows, I see triple arrows. Shouldn't I just take the trade?
Okay, so first up, do you have one of the trades you've taken recently that we can pull up and analyze together?
Okay, I can. Let me see here.
And while you're looking for that, here's the answer to your second question. So when Pat uses the now and later strategy, he's finding the trade on the 4 hour or the 1 hour, and he's confirming it on the 15-minute or 30-minute.
And that's just for the now and later, because I'm normally doing like the Stairmaster, I believe.
Okay, the Stairmaster is simply this. So like that's super simple. That's trend trading. That would be really difficult to be wrong. Like anybody else on the line who's been trading the Stairmaster, the success rate on that is super high. So, and then that's okay. It's definitely not like calling you out in any way. But here's the difference. The people who are confirming on multiple time frames, they're simply looking for that either A, the sniper entry, so a tighter stop loss, or B, they're using it as part of their confirmation. So for me, I have X amount of confirmations and rules before I enter a trade. For maybe Pat or somebody else, maybe they have different confirmations, and some of their confirmations include must be in the same direction on the 15-minute chart, must be in the same direction as the 30-minute chart. So like we all have different ways of seeing the charts. Technically speaking, I wouldn't do this with the 1 hour. I tried, and my results were mixed, to be fair. I would never do this with the 1 hour because if it's against the 4, it tends to reset. But it depends on whether or not you're trying to swing or go for like half of the ADR, or what kind of trader you're being, and then where your take profit is in your stop loss. But almost any time, if you're sticking with only the 4 hour, so let's just go the 4 hour, only the 4 hour.
Yeah, I've done that, and I've heard you even say that. I heard you say before, if the 4 hour and the 1 hour are triple arrows, you would take the trade.
I would take the trade. That's correct.
And I've done just that, but I always lose, or it goes the other way. I don't know. I just really don't know about it.
No, it's okay. So let's take one of the trades you've taken and let's take a look at it. So while you tell me which one that is and where you entered, what you also have to know is what gives me the accuracy rate I have isn't because I have some magic power or have some super intelligence. It's not the case. It's just because I'm a super protective trader. So like for instance, right here, we had our triple arrows, perfect system, perfect setup. Everything's lining up for the most part. I'm happy and content. I take my trade. Technically, this was a baby trade, like in comparison to other trades, right? This is just a baby. But most people would have tried to let this run for 1,000 pips or whatever, and then they took a loss because they had no trade management. So if I had taken this trade on the 4 hour, it busted through the 50, all my confirmations are there, I take it, I would have had one of my trades close like here, right? Because I'd be going for half of the ADR or the ADR depending on the time frame I'm using. And then my other one would have been knocked out by my trailing stop anywhere in here. So whereas this was just a baby move, as you can see by where the 2 big arrows are at, this is a tiny, tiny move. My trade was protected, whereas maybe yours was in profit, and then you were hoping this was a pullback and a double bottom, and boom, it dropped. So I think trade management could be the reason, but until you give me a trade that we can analyze together, I don't know.
Okay, so let's go. Let's see. EuroCAD.
Okay, let me pull it up.
EuroCAD. That was today, and I lost $200 on that.
What time frame were you looking at?
It was 1755.
MT4 time, what broker?
That's the broker time that I'm seeing on my screen.
So you took it right here, right? Well, wait, what broker are you using? So how many hours ago did you take the trade?
I'm using Hugo's way. Hold on. So let's say, okay. So I think it ended. I think it ended at 1812. Are you seeing that on your end?
Can you see my screen?
Yes, ma'am, I can.
So this is 1800. I mean, MT4 time can vary a little bit between brokers, but typically it's pretty close. So provided you took that this morning, because this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 hours ago, let's see, it's 7:30. So 8:30 Mountain Time, that's what, 10:30 Eastern? Does that sound about right?
I'm Pacific time. Yeah.
So 7:30 a.m. your time is when you took the trade? Or when you closed the trade?
Yeah, that sounds about right.
So you bought right here, I take it?
Yes, ma'am.
Okay, so just by what I see, and it's a little unfair because that's the 1800 candle.
What is that? Is it? Are you on the? What time frame are you on?
Now I'm on the 4 hour, so I love what I see. I'm on the 4 hour. I've got my triple arrow system, daily dots and 4 hour support, crossover of my ADX. The currencies aren't nearly as wide as I want them to be. They're a little bit kind of playing tip, touch peekaboo. I do like this is kind of coming out of that zone. I like that a lot. And I'm sure the MACD and the RSI would be kind of, comparable to this. But just to kind of keep it simple, it doesn't look bad. It did not break the 50 per se. But we also know the biggest thing that happened today was news. So this was a huge news candle. Wasn't it Canadian news? Canada had news today, right? Because the US dollar went crazy this morning when Yahoo spoke about all of his drama and then interest rates and da-da-da-da-da. The US dollar had a lot of fun this morning. But this happened because of news, right?
Yes.
So typically speaking, what Pat would teach is we wait an hour after news. So this would not have been an hour after news. Yeah, especially if you got it at the beginning of this candle. And again, we've got our triple arrow or our big arrow saying, oh, this had made its move. And if I ever saw a bullish candle like this, a huge momentum candle, a powerful candle, I would wait for price to come back to here, that 50% mark, before I would try to rebuy it, because I want the best entry. Because typically speaking, when you have any of these kind of huge momentum candles, price comes back about halfway. That gives you your best and tightest entry. So we're above the 50. We're staying above the 50. This looks like it could be kind of trying to stay buying. I mean, so let's see. Canada is stronger. Not a whole bunch in your favor here on our currency strength indicator. And our stochastic is going down. So having said all that, the biggest thing that you could have avoided on this trade was the news. And the news we have a lot of control over. And that's not like every one of these tips and tricks, they're just one more piece of information we can put into our arsenal so we can become the better trader. So we can make that 5-10 grand a month or a week. And it'll, I promise you, it'll add up. But that's what you did wrong in this trade, was you weren't paying attention to news. This had huge news today. So most of us weren't trading Canadian pairs, and most of us didn't even mess with the US dollar until after the US news, in which case the US just kind of played around a lot, so didn't do much.
Okay, so this is my last question. Okay, so this is a general question, and I think if you can answer this, this will answer everything. Because I pretty much know, well, I'm not going to say I'm a genius at this stuff, but I know kind of a little bit of what I'm doing, and I'm just trying to figure out this one thing. And if I find this out, I think it'll make the world of my trading. Okay, so if I take a trade on the 4 hour, okay, and it has triple arrows, and I'm taking it short, okay, I'm doing a buy, but the 1, the 5, and the 15, they're green, okay. There's triple arrows on those, and they're going for, the opposite direction. I mean, why? When I take that trade on H4, it's going in the other direction because of what's happening on the 1 and the 5. Because the 1 and the 5 is actually what's happening right now. But I'm getting triple arrows on the H4. So I think that's why I'm losing all of my trades, because the numbers are not adding up. I mean, the times are not adding up. What I see on H4 is not reflecting on H1 or the 30 or the 5, and that's why I feel like I'm losing money. So my question is this, and I apologize for everybody else. I'm kind of a newbie here, so I do apologize, and I appreciate for your patience. But
no, it's okay.
Do I have to be careful? Do I have to be careful of what time frame I'm entering a trade? Does that matter?
Yes.
So if I take a trade on the 1 hour triple arrows versus the 4 hour triple arrows, it's going to make a difference money wise.
Okay, well, yeah, but back up. Okay, I have a question for you. Why did your stop loss get hit if you took this trade based off of the 4 hour? Because if you took this trade based off the 4 hour, your stop loss should have been down here, in which case it should not have been hit. I mean, this is the tightest your stop loss should be. Most people put it like here. I tend to put it here.
Well, the problem is when I jump in on the 4 hour, it goes the opposite direction. So
That's
I'm
fine.
in the hole, and
Did you close the trade manually, or did it hit a stop?
No, I didn't close it. The broker would close it. They've closed many trades. I would take a trade on the 4 hour, man, and I'm telling you, it looks good. Everything lined up. I even see one arrow on the daily that looks like it's going in that way. And as soon as I take that trade, it goes the opposite direction. I'd be in the hole $200 or $300 in just several hours. And I'm expecting to hold this trade for a month. You know.
Okay, can I stop you real quick?
Yes, ma'am.
Real quick, what's your account size, if you don't mind asking?
$1,000.
Okay, and what's your leverage?
Well, I was doing fives, 0.5s, and then I reduced it to even,
No, what's your leverage? It's like, what broker are you using? You're using Hugo's Way, or using the max amount of leverage?
Yeah, I'm using Hugo's Way.
So 500 to 1 leverage?
Yes, and then they take it out. They take it out once it's, I'm losing $300 or $400. But
and how many standard lots are you using at a time?
I'd use like one position, maybe one standard lot if I think it's really well, but I won't even use that. I'll just do a half a lot.
Well, that math doesn't add up.
Well, yeah. What do you mean it doesn't add up?
Well, I'm no genius and I don't do math in public, but anybody on this line who's traded for more than a month can tell you that if you have $1,000 in your account and you're using 500 to 1 leverage and you're using a 0.5, if you have a 20 pip drawdown, you wouldn't have got a margin call. So again, let's go to the 1 hour real quick so we can see a clearer spot.
Even if it goes the other way?
Okay, drawdown is part of trading. So guys, remember, this is a job. It's your own job, but it's a business. Like, it's a career. Drawdown, people who can't handle drawdown should not be trading. And there's no like super loving buttercup way to say that. There really isn't. So drawdown, I have almost never. I've caught some of these moves where I catch the top, but more often than not, when I catch the bottom, the next trade, I catch the bottom and it keeps going and I blow an account. So typically speaking, now that I trade with the trend, I trade safely, I almost always have a pullback. I almost always face these moments. So drawdown is not a bad thing. In fact, it's your friend. A pullback that doesn't break is confirmation you're going in the right direction. So try to remember that pullbacks are your friend. They're confirmations that you're going in the right direction. Because if price reverses, it's going to drop. A pullback means, hey, this is still going the right way. Hey, it's still going the right way. Hey, that pullback is what's going to give you room to make the big dollars. So every time you see a drawdown, try to remind yourself that this drawdown, it's not fun, it's not pretty, it makes people get white hairs, it's not awesome. But this is also what helps you create this huge amount of momentum. These pullbacks give you this. So pullbacks are not bad. But anybody on this call, so let's go back to the candle you entered on. And granted, this is news, so it had to recover from the news. What you did wrong on this particular trade was enter after the news without giving it time to kind of recoup. And that's okay, we all kind of can learn. I don't know where you got stopped out on, but unless you had I don't want to be super inaccurate, but unless you had a couple standards going, there is a 0% chance that you got a margin call on $1,000 account with a 500 to 1 leverage with 40 pips drawdown. Any of us who have traded can tell you that. So there's something wrong with what you're telling me. But I can tell you, have you seen the spreadsheet? The spreadsheet in the group? I made it, it's like a compounding sheet. There's a compounding sheet. It'll tell you how much you can risk per trade. It'll tell you, like, even on the super aggressive side, the super, I know how to trade, I know my accuracy level side, it'll tell you what your lot sizes can be per your account size. And Catherine even made something much, much better. She tore it up. It was amazing. She's got a worksheet now that I'm trying to get converted to a Windows document as well and make sure it's cleared with Pat. And then I'm going to put it in the group, but it'll show you your leverage too. So based off of the information you're telling me, again, without doing math in public, there's a very, very small chance that you got a margin call if you only had one trade in with 40 pips drawdown at a 0.5 lot size on the $1,000 account. You would have to be, give or take, I don't know, $100 or $200 in the hole. Even if the spread opened up wide because of this news, which is possible, very possible, and this is a euro pair, so Wednesday the swap fee is very high, you could have caught on there. Even with all the variables that I know, which I don't know everything, but with all the variables I can think of, there's something missing in that equation.
Okay.
That you have $1,000 and you got a margin call based off of a $200 drawdown? No.
Well, this is what I'm thinking. If I go in a trade and it goes the opposite direction, and we'll say I have a standard lot on it, okay? And we'll say I'm in the hole $300 or $400, maybe $500. But I seen triple arrows. So my question is, why am I in the hole? Okay, when I got confirmations for triple arrows on the 4 hour and the daily, why am I going the other way and my account is $300 or $400 in the hole? And then Hugo's way, the broker, pulls me out. But I got confirmations on the arrows is what I'm asking.
Okay, so drawdown is very normal. Pullbacks, so it took me a long time to psychologically grow as a person, okay, because we're all human. We all have this stuff we have to work through. And I've talked about it, the more I've kind of opened up on these calls and the more I've kind of talked to people, I've been a lot more open about that. So I was stubborn too. I was irritated too. That I would take a trade and then it would go in a drawdown. I'd take a trade, it would go what I felt like against me. I mean, I literally felt like I may as well do exactly the opposite of what I'm doing and then I'll be a billionaire. That is literally how I felt 3 years ago. So now, coming from where I'm coming, all I can tell you is this pullback. So we made this move. Let's say we didn't enter till right here. Well, let's say here because I want to see the drawdown. Okay? This pullback is your friend. Pullbacks are proof that you're going the right way. And no, they're not fun. They're not sexy. They're not attractive. I get it. This one went against you a lot. And if you have 10 standards on that, that's enough to give you a little heart attack.
Yeah, you're right.
If you can't handle a pullback, you should not be trading. There's no nice way to say that. But everybody wants this smooth move. And everyone wants to show that on their YouTube videos. They want to prove that everything works and everything's simple. But let's be honest, when we look at the charts, we more often than not see stuff like this. Oh my gosh, what is it doing? I don't know. It's unclear. It's up, it's down, it's above the 50, below the 50. Big arrows, little arrows. I don't know what to do. This is usually what we look at, right? If we're being honest. So it comes down to having a set of rules, Nick, that you can follow to say, okay, these are the indicators and oscillators I see best. I understand risk management. I understand lot sizes. Maybe that's some research you should do. And I know what I'm going to do. Create those rules, use the right rules and indicators, and only follow those. And until you know your accuracy percentage, please don't go risking 5 or 10% a trade. Risk 1% of your account a trade.
Yeah, I think that's my issue.
0.01. So if you were doing a 0.5, it's $5 a pip. That's, again, I don't see how it's possible to get a margin call. Hugo's Way is one of my brokers, so I'm very familiar.
Well, I mean, sometimes it could be 5, sometimes it could be a standard. I mean, it just really depends on the, the setup that I see.
Here, ready? I can run a standard on a $100 account on Hugo's Way, one standard. And I can go into drawdown, depending on the pair, granted.
Negative? What, negative $500?
No, what I'm saying is I can do a standard on Hugo's Way,
Uh-huh.
$100 account with 10, 20 pips of drawdown, okay, and not get a margin call on Hugo's Way.
Okay.
On the pair. That's not going to work on the super expensive pairs. It only works on the cheaper pairs. But what I'm saying is your math doesn't add up. You could not have had a 0.5 on a $500 account, a $1,000 account, and have $400 of drawdown. That anybody on this call, I think, can agree with that.
I think the piece to the puzzle is, was he in drawdown with any other pairs? That might be the missing piece to the puzzle.
Up 200 pips, micro lots. Hey, Freddie, let's see. Okay, there's a lot of chat going on. Sorry, guys. I didn't see any of this. Holy cow, I missed like a whole bunch of messages.
No, clearly I need to go back to the drawing board and figure this thing out. I think you hit it on the knot. You're checking my leverage, kind of checking my risk and my risk management and all that good stuff. I'll look at that in detail and try to figure out what's going on here. But I do appreciate for your time, and I appreciate everybody else.
Hey, thank you for stepping up. It's not fun to kind of be up here. I get it. Sometimes it's hard, but I commend you for kind of being up here, and definitely kind of go back and look over lot sizes. And I promise you, just stick with it. Keep asking questions. You'll get there. So
thank you.
You're welcome. Yeah, guys, there was 4 red folders newses for Canada, but real quick, Chris, that currency strength meter is not available. Sorry, it was, but now they're charging, so I can show you the other one I use. It's the one I originally used to get 93% accuracy with the triple arrows. It works really well. Canada had 4. I didn't know how many because I quit trading. I got busy. Make sure the triple arrows agree on 2 to 3 time frames. Yeah, a lot of people do that. That multiple time frames adds another confirmation. So that's
okay.
And we all have different ways. And as you can hear, the people who are willing to step up and kind of be a little hard sometimes, I promise you that they're the ones getting 70, 80, 90% accuracy now. Freddie said your margin percentage should be above 600. I agree with that. I stopped blowing accounts when I made a rule for myself that said margin percentage should be above 5 on most accounts. Wow, this is a lot of messages, guys. I love you too, JC. Almost an expert. I'll take that. I don't know if you're talking about me being almost an expert, but I'll take that, Derek. I'm working on it. Pat and I were talking about doing one-on-one coaching. A lot of people want one-on-one, but I can't do it for everyone. So I think that we're going to do something a little differently. So, thank you guys. Up 200 pips on microlots. Freddie, what pair are you talking about? Over leveraging is like eating 100 hot dogs and crossing your finger. Yeah. Okay. I got caught up. Yes, over leveraging is like trying to eat 100 hot dogs and not die. Good luck with that, because I would totally die. So Freddie, you're in 5 pairs, 4 in profit. Is that on Hugo's Way, just out of curiosity, or is that with 500 to 1 leverage? I don't know if you can answer or not. Let's see. But yeah, guys, I promise your accounts can hold it if you create rules that kind of work for you. If you create and follow rules and we kind of check out, that's awesome. Way to go, Freddie. Hugo's Way, 1 to 500. What's your account size, if you don't mind me asking? Your account can hold it, guys. This is leveraged money. So when I say I can trade a standard lot, which is $10 per pip on a $100 account, it's because me and a lot of people we've gotten really good at kind of blowing tiny accounts in order to learn how to grow tiny accounts. Again, not because we're superheroes, not because we have some magic power, but because we were willing to risk it 100 times in a row until we got it right one time. And it does work. It works exceptionally well. So I know what a 500 to 1 account can hold and leverage safely and unsafely. Granted, those are variable questions, but what's $100 when we're being honest? Most of us blow that on dinner. We blow it on shoes or on Starbucks, where I'm sitting right now. We all spend money somewhere in our lives that if we were going to invest into ourselves, into our future, what's possible is it's potentially life-changing. You could make not only a difference for you and your family, but your kids as kids, and you can take care of those people in the hospital. You can donate to the children who couldn't go on a field trip like SuperEZ did, And then there's so many amazing things we can do. And yeah, of course, you can get a nice car and a beach house and whatever else, but that's not what it's all about. So, all right, guys, let me pull that chat back up. What are your next questions? Are there any questions about this or anything else particularly you guys want to go over? Pairs you want to look at? Of course, Zoom is not in my thing today. Every time you enter the trade. Sandra's right. So every time you enter a trade, you're going to pay for either, no matter what broker you use, you're either going to be paying swap, commissions, fees, or at least spread. And every broker works a little differently. They all have different fee structures and timing in terms of when and how they charge their fees. But just consider that the cost of trading. It's the cost of business. So like you would need office supplies if you had a certain job. You need a uniform if you're a police officer. You need, even if you work at McDonald's, you're supposed to have those black shoes, right? We all have things we need to make this work. So yeah, you just consider that the cost of trading, and I promise you, we get over those fees, and even with those ugly swap fees on Wednesdays, we can still make a ton of money, like an insane amount of money. Thank you, Elliot. I appreciate you. Oh, thank you. All right, guys, next questions, comments, pairs you want to look at. If you could possibly speak.
We could look at Euro GBP.
Oh, you like this pair? Let's look at it. Well, what time frame, what method, and what are you looking for?
I'm looking at a possible Stairmaster on the 4 hour.
Okay, so we have one arrow on the 4 hour. Keep in mind, Euro is kind of, most of their big news is done for this week, thankfully. So small favors. I don't want to touch that Zoom bar. A Stairmaster on the 4 hour would be something like, when you say, so what do you see?
Well, right now I'm waiting for possibly like 2 more on the 4 hour. So I guess by the time I wake up, to see if I can get in short.
Okay, so let's go over real quick what a Stairmaster is. A Stairmaster is, let's go to the right. It's going to be a while. So ready, we have triple arrows right here. Our system is telling us to buy. We're super happy, content, everything's lining up. Every single time this happens, this is a Stairmaster. It's buying. This right here, we have more 4 hour support. That's a Stairmaster. 4 hour support, Stairmaster. Again here, again here, again here. This was kind of a long trended move. It's definitely due for a pullback. Every one of these are Stairmasters. This is a really good one because this is daily support as well as 4 hour support. 2 arrows. Again, when we drop down, even using these indicators, everything lines up. We're super happy. So right now, what you'd be looking for, just so we know we're talking about the same thing, is you would be waiting for the actual swing trade, the actual move. So what do we see? We have a big arrow appearing, although we haven't really made any confirmed move down. We've got wicks to the upside, but it's still a lot of indecision right here. This could just be making a flag and then bust back up again. So we do have 2 daily dots, which are nice for those who are paying attention to the daily dots, which means this one closed. That means this candle is done and over with. Well, actually, let me find out. Let me not be wrong. Hold on. I might have just fibbed, and I did. So we have 1 daily dot. But what is price doing if you were to just look at this chart?
Still going up, in my opinion.
Yep. Charles, what do you see? Are you there? Charles?
Yeah, I'm still here.
So what do you see? What is price doing if you just naked look at it?
I see it's still going up.
It's going up. So let's go to the 4 hour. What do we see it's doing? What is it doing?
Yeah, it's continuing that upward move.
Okay. So for me to consider taking this trade, this is clearly a long-standing trending move up. Right now we're on the 1 hour. This one doesn't move like super smooth, so expect these big pullbacks. They're huge because this is one of the most expensive pairs to trade. It's one of the best paid pairs. I tried to master it. I was not successful, if I'm being honest. So what I need to see is this. I need to see this break this current trend, which is a huge trend. So if we go from the very bottom, we can draw probably 2 trend lines on this one. Bear with me because of the computer and internet connection. Let's see. Let's go up. 1, 2, run it through. That's how we draw a trend line, other than the choppy internet. I want it to break here. And even if I drew a smaller trend line, okay, boom, okay, I would need it to break here. I would want it to break and retest. So if you're looking for this to become this, you're not looking for a Stairmaster. A Stairmaster would mean you're going in the same direction as the triple arrows. And right now the triple arrows on the 4 hour are saying buy because they're not confirmed yet for the sell. So you'd be waiting for this to break this trend line with impulse. You don't want it to just like tickle around it. You want it to impulse with power, with momentum, break down, come back up, and then you know you can get your safe amount of pips. If you want the safest entry, it would be the break of the 50 and or the break of even here. Because you have enough, let's say this is simply a pullback and not a trend change, which is possible, and there's nothing wrong with trading that. You can make a ton of money that way. This doesn't move very much, so 25 pips doesn't seem like much, but this pair pays almost double a lot of other pairs. So that's worth like 50 pips in terms of other pairs. So that's not bad of what's possible to earn, even if it doesn't fully reverse. But you want to wait till you're sure that you're sure. And right now, I'm not sure. Is there anything else anybody sees on this pair particularly or that they would want to add? Because we've got one daily dot, which is nice. But we have this huge impulse again to the upside. Price doesn't really know what it wants to do. Now we're coming back, which could be a flag to drop or could be a flag to break. I will tell you though, if you decide to take it, keep your stop loss tight. GBP has some news coming. Oh, but not GBP. I thought GBP did. Maybe I'm clearly wrong. But so I'd put it really tight, put it just right above there. Because here's the deal. If price breaks this, the sell is no longer valid anyways. It is officially making higher highs and going in that direction. So it would no longer be looking for the sell. We'd be looking for opportunities to buy. Does that help you see the market a little bit clearer? Let's see.
Hey, Jen, quick question on this pair.
Yes, sir.
You said that you see one daily dot, which I see it on mine as well on the daily. But if you drop down to the 4 hour, I see 2. What would that be?
So that's what I was saying. That's why I didn't want to be wrong. You guys, every broker, that's probably a really good topic. So thank you, Greg, for bringing that up. Or Craig, every broker is going to have these dots appear a little differently. So that's not necessarily bad. It doesn't make one better than the other. Yes, some brokers are known for price manipulation. Now that I've got all that out of the way, the reason why we see 2 is because the market opened, so it's 7:57 where I'm at now, essentially 5 hours ago. So that means this 4 hour candle is closed. This one is just opening. We still have 3 hours left, right? That's why we see 2 dots here. So 6 yellow dots on the 4 hour, maybe even 7, depending on where it started, is going to equal 1 daily dot that's closed. But if you notice, this is another prime example that the daily dot doesn't always happen at the time you guys think it happens. The market doesn't close at 2000. The market, this dot should always be appearing at the 0 candle, but that's not always the case. Do you guys see this?
Yeah, I noticed that today on a couple pairs.
So that means this pair back painted. It painted backwards. Not only can it disappear if price breaks through it, but in theory, and I don't know what I don't know, I'm not a computer genius, price literally back painted. So this could not have formed yet because the day didn't start yet, but somehow we got a dot back here. So that's just something to kind of bear in mind. So like I told Eduardo, I look for 6 and now even 7 dots to be confirmed, because that tells me that 1 day candle is closed. And does that mean sometimes I miss the move? Yes. So let me delete these lines. But here's the thing, I'm only trading in the direction of the trend. I'm not going against the trend. So I don't really care at all which ones repaint or not, because, hold on, delete all selected. This is not an easy pair to master. I can tell you I've failed at it more times than I care to publicly admit on a recording. But if this is uptrending, I'm only looking for these, this one and this one. So even if it kind of repainted, I know that I'm eventually going to get my pips. Even if it moves, I'm going to get my pips. I'm not worried about the ones that repaint because I'm only going with the trend. And if the trend is going up, that's where I'm going. If you guys stay with the trend, so this is a huge uptrend. I would have stayed in this all the way up till here, okay, and just kept riding it out. I would have kept moving my stop. There's a chance I would have got knocked out depending on how I was managing it. or which account I was referencing. But either way, I would catch all of this according to the daily dot method, and then I would look to re-enter for the buy here because this is going up, right? I'm not looking for the sells. I'm not going against the trend.
Okay, yeah, because on UJ today, that's where I was trying to figure out when I should get out of the trade. I got out with 30 pips, but I had 2 trades in, so it was 60. But I don't know if I should have got out or not because no dots came up. But I've been in trades where I've lost, where it retraced on me. You know what I mean? So I just decided to get out.
So what pair was that?
UJ.
Let's go take a look. So that's what I'm talking about in terms of management. And learning to manage your trades can make or break your account. I'm silly. There we go. So can you tell me what 60 pips is by 2 standards? How much is that? Based off of a $10 per pair.
$200 or 600? 300. Is that what you're asking me? The dollar amount?
Yeah, so how much is that based off of 2 standards? 60 pips times $20.
1,200.
1,200, yeah.
So do you make that your day job in a week?
Oh, I absolutely would love to.
Okay.
Get out. And that's why I got out. Yeah, I didn't have a standard on it, but yeah.
Okay, so you took this trade based off of the 4 hours and you had enough confirmations to enter, and you're wondering if you should have exited. So I would not have exited because of what I see. So I'm just going to tell you what I see. I'm on the 4-hour chart.
Mm-hmm.
I either take a crossover, my triple arrows, 4-hour and daily, right?
Mm-hmm.
Which I like that a lot. We know that the US dollar had some whack stuff going on all day long, but I also use this ADR low. So I know at least it's coming down another 14-ish pips, give or take. Every broker and spread is different, as you guys know. But I know I can trade this pair pretty safely. It also just broke the 50. So price was going up. But notice how these candles get really small, and this is a momentum candle. Price wicks back up to 50% of it. You'll see this all the time, especially when you go looking for it. Our eyes are funny like that. But it comes back up to 50%, only enough to tickle it, and then comes down. So this is definitely going down. Everyone has their expert advice on what it's going to do. I don't know for sure. But you took a safe exit. So
yeah. And the reason why was because I wasn't at my computer anymore. I was at dinner. I saw it and just like, okay, I'm going to get out. I'm tired of looking at this because I was looking at it. You know what I mean? So.
Well, then look, first off, you'll never go broke by taking profits.
Yeah.
Okay. So just so you know that there's nothing wrong with that. And it takes a lot of discipline. And even myself, I'm still growing every day. But learning how to stay into the trade is what's going to make you the most amount of money, the most profitable trader. And as you learn to trade bigger lots and your account can handle it and your accuracy is good, one trade like that, so 60 pips at 2 standards, is enough to pay your bills for most people.
Yeah. Yeah.
No, but this is what I wanted to show you. This broke the trend line. So this was going up, right?
Mm-hmm. Yeah.
See that? And I like that. I like that a lot. I like how this is looking like it's coming down. If I go to 1 hour, there's a lot of uncertainty though. A lot of U.S. news. So
exactly. That was another factor. And I've been caught up before in the retrace all the way back up to the trend line. You know what I mean?
Well, then you managed it well. But for future reference, you have a few options. You can get out when price closes above the 8, right?
Okay.
That's something I do regularly. So sometimes, does that mean you're going to sacrifice some pips? Yes, it does. You have that exit. You can get out next time there's a crossover. You have that exit.
Correct.
You can also just keep moving your stop loss up. Or for instance, let's say you're up, the ADR on this pair is pretty low. So let's say you're up by 46 pips. In your case, you're up by 30. So once you're up by 30 pips, go ahead and apply a 10 pip trailing stop, which means if it keeps going in your favor, you're going to keep getting more and more and more until it retraces by 10. If it's got a bigger ADR, I'd say apply like a 20 pip trailing stop once you're 50 pips in profit, or a 30 pip trailing stop if it was a GBP pair once you're 50 pips in profit. And then potentially you can get all this, but you don't have to worry about losing if it retraces.
Okay.
So lots of different exit strategies. The key is obviously money management. You can keep just always protect your profits. Don't be up that much money and then reverse. That's just stupid.
Yeah.
So We don't want to do that. But good job. Way to go on your trade.
All right, thank you very much. Appreciate
You
it.
are welcome. All right, next question. Let me check the chat. Let's see. $1,200. Good job, Freddie.
Jenny, I have one more question.
Yes, sir.
What are those candles called? The Heiken what?
I'm probably mispronouncing it because I am not an English major, but it's Heiken Ashi. It's Heiken Ashi Ash. I'm pretty sure is how you say it. Did I butcher that, guys? Anybody want to correct me?
Heiken
Yeah, that's
Ashi.
correct. Yeah, it's Heiken Ashi.
Heiken Ashi. There you go.
Thank you.
It looks like Heiken Ashi Ashi. When you type it out, Catherine's got it. So it's Heiken Ashi. Freddie, I took a swing trade Tuesday, so I'm still holding 40 pips on the trail my stop. Take what the market gives me. Good job, Freddie. Austin, yeah, UJ looks like a sell, but you got to keep in mind all that news is ugly. It's not pretty. So let's go to a smaller time frame and see what we see. Everything is saying sell. We're on the 1 hour chart. We did just break the trend line, and that's appealing. That's very appealing. So I see this coming down to the ADR low, and that does not mean that we're going to take this entry. So let's say we say, yes, we're going to enter it now. Everything looks good. I'm happy. Well, let's say it retraces a little. It goes back to 50% of that candle. That's something you have to be willing to deal with. I think it's going to definitely come down to the ADR low. If it breaks that, I'd be looking to sell it further. I'd be looking to sell it to here. So that's how I would see it. But you have to decide what you want to do. This is really kind of getting down there. Although this is the slower one. Let's take a smaller. Yeah, it broke. So we have a crossover. It broke the 50 with momentum, came back up and retested. It now officially broke this. It made a lower low. So if we want trend confirmation, that's what we're looking for to decide the trend. Is when it's making higher highs, we're going up. When it makes lower lows, we're going down. It sounds simple because it is simple. And then now we draw a trend line. It broke the trend line. I wouldn't be surprised if it came back to retest a little and then dropped for real. At least, I mean, depends. That's a lot of news. So they could do a lot of playing. Let's see. But this guy, yeah, he's a mess. And those interest rates are really going to make the whole US dollar thing a little screwy. But I see the US dollar continuing to get a little weaker. As long as the lot size isn't too high, I can stomach a 50% pullback. There you go. Yeah, that's trading, guys. I'm glad, JC. That's trading. Just a little bit of a pullback. I stopped freaking out at pullbacks. Now I think of a pullback as, yeah, baby, that means I'm right. That means it's going in the direction I want it to go. I'm super happy about the direction I want it to go. I would get concerned when it starts making lower lows and I'm trying to buy. And then I'm like, oh man, time to go. Time to get out of here. So that was in the news today, Freddie. Let's take a look. Guys, if you're trading this, some guy blew his account yesterday with trying to sell US 30, but he blew it big. He blew a big account, a real big live account. Not a baby account either. Really, really big ones. So this was in the news. It is an all-time record high, and we know something major is coming. Now, do I say buy, sell, buy, sell? Nope. I can tell you that I will tell you guys this on this call. In terms of me scalping US 30, which I got really good at when I'm bored, I go to the 15-minute time frame, 5-minute even, because the spread on this is massive. The amount that this moves is massive. Massive, massive. I do use something very comparable to the flip-flop strategy because, let's see, I don't know how that calculates on this broker, but using a standard lot on CoinEx, that's $30. Using 10 standard, that's 300. That little bitty move right there on the 5-minute chart using obviously US 30. But this trades pretty comparably. So what this is going to do, I don't know. This is a nice flag. Can you guys see that? So price went up. That's the pull. This is the flag. Think of like the shape of a triangle, piece of pizza, a pirate flag. That's what this is. So what is it going to do from here? You can draw yourself a little line, and when it breaks out, you can buy or sell accordingly, but just do so with a massively tight stop. This isn't something you should be trading and walking away from. This is something you should like be not watching TV for. You should not be paying attention to anything else at all. You should only be looking at this, get your pips and get out. So see what price does. We've got this wedge formation. It could impulse up a little bit and then drop. It could even impulse down. to kind of collect a few more contracts and then go up. So your guess is as good as mine. With US dollar so weak and so much uncertainty, I don't know. I mean, I would trade US 30 before I'd play with this one. I just like the way it moves better. Well, let me go to the chat. I'm in NZD USD. It had a mean pullback, but now I'm in profit. Good job. 1 minute is really fast, Freddie. You have to have you have to have something I don't have. I would definitely go to like the 5 minute personally, because it's got to have enough momentum and volume to eat the spread at least. I closed it once it was 61.8. EJ looking cute for a short. Okay, let's take a look. I don't know why I don't have my Zoom on here. I don't know if it's the Wi-Fi or what. It's temperamental like that. Let's take a look at EJ real quick, if it will load. So let's go to the 4 hour. Wait for it to catch up to me because it wants to. So Freddie, can you talk just out of curiosity? We've got 2 dots, crossover, broke the 50.
Yeah.
I like that for a short. It's in the same direction. So 1 dot, oh, that's only 1 dot. But I like the crossover, the 8 and 18. It broke the 50, it broke previous support. So we've got something moving. JPY is really strong. Euro isn't as weak as we'd want it to be. But we've got a crossover here. Let's go take a look. The 1 hour. This looks like, and everything's lining up. This is selling. But we knew the euro was going to keep going down once it kind of decided what to do with all that news. 20 pips, 38 pips, pretty safely. Even if it just goes to here, you have anywhere from 20 to 30 pips. Easy. Definitely easy. And this is breaking the 50, which is good. This looks like a good sell. So just so you guys know, this was called on this call. Freddie gets credit. It was good. Pretty sure that was Freddie, maybe. Maybe that was Austin. It was Austin. Yeah. That's a good one. I closed once past the 61.8 retracement. Good job.
Thanks, Jenny.
Yeah, that's a good trade. But do you guys see what he's seeing? Just as you guys learn, when you jump on these calls and you're willing to kind of step up, you'll notice the guys that are on here and now are having like 80, 90, blah, blah, blah. They're growing their account by 30%, 50% a trade. It's because they're the ones who are willing to be silly enough to ask the questions, to be quote unquote dumb or annoying, because no one cares about that stuff as long as you're learning. If this will let me draw it accurately. We broke the trend. We broke the 50. It consolidated and it broke with momentum. It broke this lower low. We've got triple arrows. We've got daily support. Yes, it's only 1 dot, which, as you guys know how I feel about the whole 2 dot thing, because I just don't like him disappearing. That would be me based off of only going off of the daily dots. But since we're not only going off of the daily dots, this still looks good. We've got wicks to the top side. So even if we only go to the next daily dots and this can kind of consolidating, that's what it looks like. Like I said on the other time frame, you're looking at 30 pips minimum. And these calls are recorded, so go back and kind of take a look at what happened on July, whatever today is, what is through the 10th, and see if this went for the 30 pips for those who are watching it tomorrow. And take a look. There's a good chance that this will have went the 30 pips, if not more.
So Jenny.
Huh?
Hey Jenny, so when somebody is making 30, 50% per trade, I mean, they must be using very, very high lot sizes relative to the size of the account.
Well, yeah, you would need either a high spread broker or well, you definitely need a high leverage broker, but your accuracy. Here's the thing, if you take this trade and you have the rule that you always move your stop into profit, 30% per trade is not difficult because these guys are being very selective. They're only taking the best. So they might see 12 setups, but the difference between the guy who's getting 30% consistently and the guy who keeps doing 10% a trade or 5% a trade, is he's looking for 20 trades. He's losing 10 of them, right? So at the end of the week, he may have made money and lost money, but it's close to break even. Like he's just, treading on water. He's not really growing. Whereas the people who are being more selective, and yes, they're trading high risk, but they're using every confirmation. So 30% is a lot to risk, especially with the 1-to-1 ratio. It's a lot to risk.
Okay.
But most of those gentlemen, they move their stop into profit if they're following anything I teach. I'm willing to close out with the 2 or 3 pip profit versus lose 30 pips on a high lot size, because a 3 pip profit on 10 standards is still going to make you very, very happy versus losing 30 pips. It's just a different concept of trading. If you're going to keep trading 0.01s and 0.05s for the next year, you're not going to grow. You're not going to compound enough to either walk away from your job or to hit 6 or 7 figures. Can't do either.
Okay, so the key is to look for high quality trades and use high lot sizes.
Yes. But you need to know your accuracy. So you need a set of rules, a trading plan. You need to have back tested them, or maybe have worked with me personally on coaching and say, okay, so this is what I'm going to do. This is how I'm going to do it. There are no other options. There's no other strategies or tools I'm going to add or take away. You have to stick with something long enough to figure out what your results are, because you can't even have any measurable data or information until you've done something consistently long enough to know what your results are, so we know what we can add or take away. And once we have that information, so there are people who can grow their accounts to 6 and 7 figures in 20 to 40 trades, and they can do it consistently enough because they know their accuracy, because they know their losing ratio.
Mm-hmm.
It's not impossible. It's not easy, but it's not impossible.
Okay. All right. Thanks, Jenny.
You are welcome. Next question. Let me go to the chat. Sorry, I have to close out my window. I just have another question yet. Take good notes. I'm glad, Sandra. 3 for 3 this week. Way to go. That's 100%. I don't care if you took the smallest amount of trades. 3 for 3 is amazing, because that's 100% ratio. And the less you trade, the more you make. Everyone jumps on these calls and they're looking for the next trade, they're looking for the next trade. And it's like, no, you guys are missing the entire boat. All right, anybody else have any questions, comments, pairs?
Hi, Jenny.
Hey, who is this? Don D?
Yeah, this is Don D. Actually, I've been on the call, but I'm ashamed to say it. I've been asleep. And you probably looked at this pair, but I'm in and it was up earlier.
Can you say the pair again? I'm sorry, I didn't hear you.
Pound Swiss.
Okay.
And now I'm in drawdown, but I haven't hit my stop. My stop is just below the weekly support. The weekly and the daily were basically on the same line. I'm looking at all the indicators and I don't see where this might turn around. Basically, I'm say 128, 129 pips down in drawdown, but I don't see anything that's saying that it may turn around.
This is selling.
Before they hit the stop.
Yeah, this is selling.
Yes.
You have daily dots.
I have daily dots and weekly dots. I'm just below the weekly dots. But
yeah,
the weekly and the daily dots were roughly on the same plane.
But, so again, if we go to super naked, here, let's go to naked-ish, okay? Sorry about that. So do you work nights or something, or can I ask why you're sleeping?
I was in and out a lot today in Texas. And the sun kind of wore me out today.
Okay. Because that is so not even a little nice, let me tell you. A little nice. Okay, so just looking at the super naked, super plain, not a whole bunch on here. We have our daily dots saying sell. We have a crossover saying sell. Our ADX is saying sell. Our Heiken Ashi ash candles are saying sell. Now, worse than that, like in terms of you holding this, I'm going to go back to this over here. This is making lower lows, guys.
Right.
Everybody in the world, including myself, wants the GBP pairs to buy, but they just are not playing nice, okay? And look, it just beat that low, these dots here.
Yes.
A new lower low. So this is going down. I mean, this would be one of those instances where you decide to cut your losses. I don't know how far away it is. I don't know what your lot size is. And look, I could be wrong, but so you can't fuss with me about it. First off, because you were sleeping on my call. And second off, because we're all human. But I got to pick on you a little bit because somebody was on here one time breathing all Darth Vader.
Oh, no, I'll make sure I'm
Okay, got to pick on you. So, like, look, even if it comes down, that's up to you. I don't know what your lot size is. If you have the appetite to risk another 30-ish pips, depending on what your lot size is, and then how you're trading, that's 100% your call. But to me, this is selling. And I don't have enough indication to say to buy.
Well, that's what I was thinking too. I don't see anything for me to hold until it hits my stops. But my stops are just below the weekly.
Where's the week? What number is the weekly at?
Excuse me?
What number is the weekly at?
Oh, let me check and see if I can see that. That is that weekly is 1.23.
So 20 pips.
Yeah.
Maybe 2-3 what?
Hold on, let me get back over here again. 2-3.
Did you say 2-3-2?
No, it's 2-3-9-6.
2-3. What?
It's 2-3-9-6.
Is that your take profit or your stop loss?
No. That's where the weekly support dots are. My stops is 2-3-5-6, and I have one at 2-3-7-2. 3-7-2 and 3-5-6.
Oh, so one of them's one away.
Right.
Okay, gotcha. Okay, that's up to you. 100% up to you. Personally, this is selling.
Yeah, I'm thinking if it hits that first one, I'm going to close the others. So I have 1, 2, 3, 4 on that area and lot sizes. They're all small. The largest ones are only 0.10s. I have 2 of those and a 0.06.
Okay, gotcha. Guys, this is why it's important, and that's why I wanted to do tonight about the exit strategy. If we took this as a buy, okay, let's use this, and this gentleman is nice enough to kind of be transparent, and that takes bravery, so that's awesome. So let's say we took this as a buy, and we had enough indicators on our 4-hour and our 1-hour. This system has X amount of percentage of accuracy. So when I first tested it, I had 3 to 4 months of data saying this was about 70-ish% accurate. And I was happy with that, but then I had to adjust. So I adjusted my stop loss, I added that absolute currency strength indicator, and then I got it for a consistent 4 months, every week, 10 to 15 trades, avoiding news, 4-hour and 1-hour in the same direction, to in the high 90s in terms of accuracy. When that plays out on the actual charts, we're just gonna say it's 93%. Having said that, having some losers is not bad, but having a way to exit the trade is really important. So again, this is not pretty. This is not the perfect setup. Because when we look back, we see these perfect setups that go for 3 months and we're like, woohoo, millionaire. And we're excited. But then we come to the charts and we see this. And we don't know what it's going to do. So having a system that says, hey, this says to buy, but then I get this rate crossover. I broke below the 50. I'm officially closing below the 8. My oscillators are all saying sell. I need to take this as a sell. So let's again go back to I need to exit this trade, So if we had entered here based off of our triple arrows and we had all of our confirmations, and we get this second Heiken Ashi Ash candle, again, this is a pretty big time frame, so a lot happens in this. We're closing below the 8. Our oscillators are saying sell. We now have a crossover in the opposite direction. You have to decide if you're willing to give up all these pips for a loss, or if you're going to take a small gain, walk away, and then if it's in your favor again, you re-enter. If it's not, you stay out. Having an exit strategy before you hit your stop loss can potentially be the difference between you making 6 figures before the end of this year and you still hovering around 10 and 20,000, just kind of earning money and giving it back, earning money and giving it back. That's going to be the difference. And a lot of people use this or the short candle. So if that works, use it. If not, you can choose. I just would tell you not to choose an oscillator. Don't ever choose an oscillator as an exit indicator or the arrows that repaint, because these move and there's no such thing as overbought and oversold. So let's skip this. Pick what you like best and then stick with it. So for me, we're going to make this super big. When you saw this right here, sorry guys, I don't want to click on the zoom because then it disappears. So we took this, maybe we got in here, we had a little drawdown. That was scary, especially on a GBP pair. We're up by 50 pips. Had you had a take profit set, one of your trades should have closed in positive if you had stacked twice. But now we have this ugly candle that's closing below the 8. That would have had me move my stop loss up at least, right? Now you have a candle that's closing below the 50. Now I'm getting a little bit, I don't like how it closed with momentum. We have a crossover. And then worse than all of that, now we've got daily dots saying this is selling. And this is what, the 7th dot? So what is this? That happened at 0. But don't quote me if I'm wrong. This means a closed daily dot. So something to the downside is coming, which of course wasn't clear. This would have been a pullback, which everybody would have been freaking about. But now what do we see? It's going in that direction.
Right. Yeah, I had a couple of chances to take profit on it, and I didn't.
That's what I try to tell you guys is Pat trades a little different than me, and that's what makes us great partners and good friends, is because he has all these strengths that I don't have, and I have some strength he doesn't. So for me, I'm all about protecting my money. I'm all about risk management, because capital preservation is the only way you're going to hit bigger numbers. So if you were up, again, let's pretend you had 10 standards. This is enough to buy some people's dream car.
Oh, if I had standards, I wouldn't have had the nerves to still be in there. I would have gotten out the profit.
But that's the problem. Okay, so that's the psychology. What did I learn from Pat? I had skills in trading, at least reasonably enough to be profitable. What I learned most from Pat was how to like handle all my feelings. Okay,
Right.
how to handle that. You guys have to get to the point where you're trading this move. So somebody get out their calculator. What's 10 standards on 90 pips? Let's just go down. Say 80 pips. Does anybody know the answer to that? I'll even get out a calculator so I'm not wrong in public. 10 times 80 pips. 10 standards.
No, that's 8,000.
8,000.
It's 8,000.
10 standards is $100 a pip, right?
Oh, $100. So that's 80,000 right there.
That's $80,000. So I don't know. I'm sure some of you guys like that I8, right? I don't know what the beginning model runs for, but it's probably over 70K, right?
Yes, ma'am.
I want you guys to see when you manage this money, and then that's kind of a biblical principle if you're willing to hear it and you have the ears to hear. You have to prosper where you're planted, right? You have to be trusted with what you have if you want to be given more. And that includes our relationships, our homes, our people, our money. So if you want to be able to turn this move into your I8 or whatever your goals are personally, when you're managing your trade, when you're checking your trade, treat it like it has 10 standards on it. And every time you do that, you're going to get a lot more better. That was not proper English, but you know what I mean. Does that make sense, guys? Because if we keep treating this like, okay, I don't mind losing $30. Hey, no problem. We're good. We're good. You know, forget about it, right? And we keep treating it like that, then we're going to keep giving up 50 pips. And then when we do get to the bigger lot sizes, we don't know how to manage it. We don't know how to treat it. We don't know how to trade it.
Yeah, that makes sense. And the reason I didn't put bigger lot sizes on it, I was attempting to see if I could stand holding it for a Stairmaster. I think I'm ready for the Stairmaster just yet.
This isn't, so again, what is the Stairmaster? Like I told the other gentleman on the call, a Stairmaster trade would be what? What is this market doing?
Trending down.
So this is a Stairmaster, this is a Stairmaster, this is a Stairmaster, and this is a Stairmaster. This is not a Stairmaster, this is against it. So the whole concept of the Stairmaster is the ones that are going down.
Okay.
Until you have a trend reversal, right? And how do we decide the trend? We decide it with the 50, higher highs, lower lows, and all that good jazz. Let's see.
Here's some things up. Thank you.
You're welcome. Just anything I can do to just help you guys see the market in a different set of eyes, in a different way. And somebody maybe can help me find, there's UK oil. Where's US oil? Oh, there it is. So in my other account, I posted a screenshot up on oil. And this is why I don't close or only use the daily dot as an entrance or an exit, is because yesterday we had a daily dot, and today we had a daily dot just for a brief moment. And what is price still doing? So I'm going to take that to this naked chart because I want to see it better. I got to go all the way down again. Bear with me. Let's see. So somebody was asking about oil. I'm going to go over this real quick, and then I'm going to hop off. They got some, like, I don't know, Aretha Franklin kind of love music playing on at Starbucks right now. It's kind of good. Let's see. So who, for the person who asked about oil, Maliat, did I say that right? Can you talk by chance?
Hey, Johnny, it's Milo.
Milo, okay, I'm sorry. Sorry, guys. But I knew that. I've talked to you before. But what do you see on oil?
Just, it could be a possible future trade because, like, just in terms of news, like, all of the stuff, Donald Trump and, like, Iran, like, the oil news that's going on. And like you said, like, trading oil, like, daily dot to daily dot. So you said you took the trade on a buy for the daily dot?
Yeah, I took it right here, like, when it crossed over.
Okay. And then you say you're going to close once you see, like, a sell daily dot?
Well, no, that's the kind of the tricky part is you have to have more than one confirmation. So for me, ready, this had a daily dot twice now, and it pushed through it. So right now my stop, I keep moving it up. I don't know what I'm up now, give or take 280 pips, which, you know, oil calculates a little differently for every broker in all fairness. So let's be fair about that. But we also, there we go. We also just we made a higher high. So can we expect this to pull back a little bit? Absolutely. Before it goes up? Probably. But either way, we are trending up. In that, when we say that, it doesn't mean it can't, like, come way down. Heck, it can come down all the way to here, which clearly wouldn't be pretty. But I would know that I'm looking for buys. This made a higher high. So until it stops making higher highs, I'm only looking for buys. And that's what I'm doing now. So for me, I'd probably, if it closes below the 8 on the 1 hour, I'm looking for an exit. But for now, the candles are getting smaller. We're getting dojis. We definitely have something happening, probably the pullback I was just referencing. But for now, that's it. So, I'm sorry, go ahead.
That's what I was wondering, if you would still be looking for possible buys, like on a pullback.
Well, come on, this is basics. We forget about the basics because we have all these fancy tools and then we don't know what to see or think anymore. I'm guilty of it like everybody else. But so we have this arrow, which is of course in the way of my candle right now, but we're not ready to sell yet. We're just not. This is still, everything is still saying this is going up. So even if we get a healthy pullback to like the ADR low, very possible, which let's see, the ADR low is 59.15. So let's go over to here. Let's draw a line at the 59.15. It will let me, silly butt. Okay. There we go. And this is guesstimation. These aren't exact numbers, guys. But that would kind of line up with this whole concept of come back, retest the trend before it goes up. And you guys can see how this all works. It all kind of goes hand in hand. The more of these calls you jump on, the more you trade, the more you're going to see the trade differently. Haynes, the most volatile stuff is your indices, and that is some massive stuff. You have to have a big enough account, and you have to have a high enough accuracy, because going for 10 pips is fantastic, but your risk to reward is typically not good. So one loss could potentially blow multiple wins. 15-minute hasn't hit triple arrows yet, let alone the 30 or 1 hour. Hey, what pair are you talking about, Austin? Was that for
I'm talking about the oil pair you're looking at.
Yeah, no, it's not. Everybody wants it to sell, but it's not selling, guys. It's making higher highs. So until it makes lower lows, take everything off the charts and just realize that while it's still making higher highs, there are no amount of oscillators or indicators that can tell you something else. So it doesn't matter. This can tell me an arrow all day long, but until I make a lower low and I stop making higher highs, I'm still looking for buys. But this is getting close to something's coming. It could just be a squeeze or a pullback, or it could actually reverse. And it's not my job to know that. It's not your job to know that either. Our job is just to catch the move. So like, for instance, if this was showing us signs to sell, like I mentioned last night, one of the questions I asked myself is, what if it's a pullback? If it's just a pullback, is it enough to make a small amount of money? Is it worth the risk? So, because sometimes you can trade pullbacks, even if it's not a technical trend change, but you have to know if the pullback is going to be worth entering on, or you want to wait for the confirmed trend move. That's personal preference and math. No, I've never really messed with natural gas. Let me see if I can find it on here. This one right here, I'm guessing. What's the price on your chart? Is it 2.34-ish, Diana? Just to make sure I'm messaging, I'm looking at the right one. You're welcome. I super appreciate you. Let's see. So I gotta scroll down. A lot of U.S. news coming out tomorrow, guys. So we're looking at this now for most commodities and stuff. I've never traded this, but let's take a look.
Jenny, the answer is yes. I'm sorry, I couldn't get unmuted.
Okay, cool. Well, because some of them, the brokers name them different things. Now this is an ugly, ugly pair. So, ooh, see, these candles are all funky. Wow.
It's a really weird pair. That's why I wanted to know if you'd ever looked at it.
Oh, no, I haven't. Like, I have no experience in it. The same concept. I mean, you've got a daily dot, clearly. 1, 2, 3. So you have one daily dot, give or take. We're trying to break the 50 on the 1 hour. So if I was just going off the 1 hour, which is where I typically enter on, is the 1 hour, for almost any trade strategy except for a scalping strategy, my entry is on the 1 hour. So this isn't 1 hour, so I'm silly. There we go. Let's see. Yeah. Are you looking to buy or sell this right now, or?
It's really confusing. I saw the 1 hour, and I was looking at the 30-minute. It has a triple arrow, but there's triple arrows on every one, but they're different. It's like, oh my goodness. That's why I wanted to ask.
Well, so for the gentleman that was asking about, does everybody have to click between different time frames? The answer is no. You don't technically have to do that, but you have to be accurate. You have to have enough skill and or knowledge to know when you do and know when you don't. So something like this, because I've never traded it, I would want a lot of confirmations in terms of other time frames. But I've never traded this pair, so no experience whatsoever. You could be making a head and shoulders, which means it would drop to here before it kind of comes back up. I mean, so our eyes can see so many things, but this is like super crazy how it just makes these flat tops everywhere. I don't really know what that's about to even speak on it with any amount of intelligence at all. So I have no idea what would make price just like stop, like at a perfect straight line. I mean, continuously throughout the history of this pair. That's super crazy. You know, maybe the market closes for a lot of hours. I couldn't even begin to guess why there's no candles here. Mm-hmm. That's trippy. But that to me is like super unclear. But if you want to practice this trade and learn this trade, there's nothing wrong with that. I don't know how it moves or to be familiar with it. For me to take it according to like technical analysis, because that's what we're doing, right? We're technical analysis traders. We're not fundamental traders. Mm-hmm. So I would want it to break the 50 for sure on the 1 hour chart. I'd want it to break the trend line. I mean, I have enough other confirmations. I'm sure the RSI is getting close and the MACD is close. But that would be enough for me to take that, to try it out. I would do a tiny lot size just to see how it calculates pips, how it works, how it moves. Because this whole flat stuff, like that's trippy to me. So I have no idea what this is going to do. I wouldn't even begin to tell you.
I did some back testing on it, and I did see where it doesn't even hardly move for a lot of hours during the day. And I wrote down the hours. I back tested it for about a year. And I actually made about $3,000 on it today, just playing around with it. I took I don't remember if it was long or short. I have to go back and look at my records. But because it is $100 a pip, and the other thing is it didn't have any, I'm using Phoenix, it didn't have any swap fees at all. And also during the changeover, and the market wasn't moving at all during that hour, it barely had any spreads on it. So it looked like a really safe pair, and it doesn't look like it paints on the arrows. Once they're there, they're there. And I'm thinking I was going to do, just trade it a little bit and play with it and see if it looks like, from arrow to arrow, if it's pretty safe. So anyway, I just wanted to show it to you because it was interesting, and I did when I saw a setup today, I did make about 3,000, and I was trading 10 lots.
That's on Coinex. That's awesome. Hold on, let me find it again. I'm just kind of curious. You know what? That's actually that whole flat top thing. Although it's not pretty on my eyes, did I pass it? It's totally not pretty on my eyes at all. But because that becomes a stable price point, that would make any dots and any signals we get. Well, now we're on the 1 hour, so let's go to the 4 hour. A stable price point would make these more stable, in theory. If you think, because that's what this is, right? Is these come off of a price point that doesn't break. These come off of a price point that doesn't break. So that would be pretty sweet.
I thought so.
That is. I don't know anything about it at all to be smart, but that's awesome.
Well, I'll keep you informed because I'm going to start trading it. I'm going to paper trade it right now, just demoing. And then if it does what it looks like it might do, according to my back testing, it can be real sweet.
On the 4 hour?
I was doing between, I did the math and I went back and forth. It was some serious bucks.
Well, so on Coinex, you have to realize that they trade differently. So some commodities and indices, they trade differently on Coinex versus other brokers. It's not necessarily worth less or more. It's just calculated differently. So having said that, like this looks like only 10 pips, but on a 0.01 lot size here, that it would be insane. This would be insane.
Mm-hmm.
Because you're doing a standard, and I'm guessing it's you're doing 10 standards, which is technically would be like one standard on this broker. And either way, this would be $1,000. I mean, this would be $10,000 right here. This one move. And this is a small one, not the big one.
Yeah.
That's awesome. The flat tops, in theory, again, this is all just theory, because price stalls the way it does with this pair, would make these more stable. And if you only took the ones in the direction of the trend, so this is going down, take this, and take this. Don't play with the ones that are against the trend until it changes direction. That's awesome. You can really get somewhere with this.
And it looks like once it changes direction, it just stays there. It's very, very consistent. I didn't see a bunch of fluctuation that would confuse people.
Well, yeah, hindsight's always 20/20 though. At least it is for me. So these 6 is one daily dot, and then so this is 1 day of going down, and then it reversed, which isn't a bad thing. It means we would miss this trade. We don't want to take the 1 day trade. We want to have a chance to be right and afford the pullback. So that's awesome though. It's a really interesting thing. I've never even went through this pair. The way it stalls all flat like that, that's kind of fun. Okay, but thank you for sharing that. I super appreciate you.
Thank you so much.
Okay, CJ was very kind enough, JC was kind enough to let us know there was a ton of news coming up this week. We want to be mindful of that in terms of the U.S. pairs. I am going to go ahead and wrap this up. So I wanted to kind of make this short. I may or may not try to figure out how to edit it to put it on YouTube properly, but either way, I'll put it in the group. And I hope you guys have a fantastic night. Thank you for jumping on. Sweet dreams. God bless and all that good jazz.
Thank you, Jenny.
You are welcome. Good night, guys.
Thank you so much.
You're welcome. Sweet dreams. You guys take care. You're welcome, JC.
Thank you, Jenny.
You're welcome, guys. I can't see your name anymore, but you're welcome. Thank you. Thank you. Thank you. Have a fantastic night.